Hey, this is Jonathan Gurney. It is 11:16. It's still very, very early in the trading session. A lot can still happen. But just wanted to keep clients aware of some of the trading decisions that I've made along this week. I am bullish. However, we are hitting some strong resistance at very overbought levels. I think the market is in at a really good point because we're getting great participation. Small caps are finally breaking out after months of consolidation. This is very, very good, but I'm going to be disciplined and take gains along the way. So as you can see here, this target right here, right around, let's call it 47.15, we are battling right now. And I took some gains this morning because I don't like the risk reward of testing. Again, I could be wrong, but everything is risk reward. Okay. So we're testing strong resistance. I mean, for a long, long time, this has been resistance. Now we might push higher and I have no problem adding. But I have reduced Wednesday in between the Fed announcement, at 46.40. 46.39-ish. I took some gains there. And today I took some gains this morning. Not seeing any real weakness in price action yet. But it's just saying, hey, if something ever happens overnight, it could cause some problems and I don't want to lose any gains at this point. So we're testing key levels. No concerns at this point. Seasonality looks good through about the 10th or 11th of this month. Again, we've been following seasonality scarily very close. It doesn't mean it's always going to follow that, but it is following very closely. And so I do think that can continue, but it doesn't mean you're not going to get a pullback. If we got a pullback and filled this gap, I think a lot of money would come in. I really do. So I'm still bullish, but at this point, after this morning's trade, I am 31% invested. So I'm being disciplined. So again, on a week like this, I'm going to give back some performance. So I'm not beating the S&P 500 because I'm basically trading the S&P 500 and I'm taking gains along the way. So at a top, I'm never going to time it perfect. And at a bottom, I'm never going to time it perfect, but I'm going to slowly take gains. I do wish in hindsight that in between the FOMC meeting and the actual, the statement in the meeting itself. So 2 is the statement, 2:30 was the announcement. 2:30 was the actual meeting, the conference itself. A lot of times the first move it usually goes the opposite direction. And so on a nice move in between the 2 and 2:30 announcement, I took gains and it just took off like a rocket after that. So it was unfortunate, but at the same time, I'm making money. So I can't really be too disappointed. And again, this could still very well slam into here and struggle. So it's going to be an interesting close, but I wanted to keep you posted because, the last 2 months, every week I've basically beat the market. This week I did not because I'm trying to take gains and not be too greedy at this point because it's been a heck of a run. I mean, this is insane. Like we literally got in down here and rode a very nice rally. So cannot complain whatsoever. It's been great. So another thing that I'm just so you're aware, I'm seeing some complacency. Doesn't mean it can't last, but we are seeing the McClellan index going in the right direction. That is bullish. It's very good. We're starting to see usually where you start to see some pullbacks. So traditionally when you start to see people hold over 100%, it's like people are pretty complacent, back off risk. So I'm starting to see some of the things align, but price action has not died yet, which is why I keep some on. Put call ratio, the amount of protection people are adding, it's very complacent out there. Okay. We are, as of Thursday, we were at 39. Usually under 40 is pretty complacent. We've been there for a while. It can continue because, again, we're getting good participation. This is what I've wanted for a long time. But I am slowly taking gains so we don't get too greedy. I think a pullback would be very much bought. Excuse me. I'm going to switch to the longer term perspective. So this, if I were to draw a line from here to here, you can see we're butting into resistance there as well, just like we're butting into resistance right here. So same type of scenario with a lot of different charts. And also, if I were to show you how overbought we are, it doesn't mean it can't continue, but again, the biggest rallies happen on very little volume, and that's happening. So when people are like, there's no volume, this is ridiculous how high this is going, that's usually how it works. Low volume, and it rallied hard. So none of this is surprising to me. But when I see a historical RSI of 79, it can continue. Like if it continues to stay up here, and it very well could, I think it will, but I think we need this little pullback right here. Something like this, test a 10-day, and I think people load up and we go higher and higher and higher. I know that might surprise you, but we are finally getting participation in stocks. This is what I've been waiting for all year. So I'm bullish, but I'm being realistic to say we're probably due for maybe a 1-2% pullback. I do think mid-November we see something a little bit larger potentially, but if not, we'll have to add, and that's completely fine. So overall, I feel very, very good about where we stand and taking gains along the way, not being greedy. So underperformance today, like today, the S&P 500 is going to likely beat me because I took gains a little early today. But I feel like I'm in good standpoint to buy a pullback, something that's very reasonable to test the 5-day moving average. Whenever I see an extension this far off the 5-day, which is this orange line, I start to get a little bit like, this is getting a little bit too much, but it can continue. Like, for example, I mean, even in all these examples, we weren't this far off the 5-day. Maybe here, continued a little bit longer. This is day 1, day 2, so it can continue. But I think the averages need to play a little catch up, to be honest with you. So overall, currently, right now, this is not the close, but we're really struggling to get over the 47.15. That's just short term. But what I'm interested in is, can the Eurozone, so like the DAX, can it hold its gains? This has been odd that this has not been able to really follow suit. It doesn't have to, but this has been relatively weak all day and struggling to keep its gains. So I'm watching really close there. I'm very interested to see if this sells off into close, have a little scare Friday, maybe Monday, and a rally up until the 10th or 11th. Not a prediction, just seasonality would not surprise me whatsoever. So quick video, wanted to explain why I'm taking gains. It's basically risk reward is not good up here. Even if it does go higher, I'm probably going to see lower prices at some point, and I want more cash to really jump on that first dip. I want to buy hard that first dip. So that's my rationale. Could be completely wrong, but I have some on either way. So thank you guys. Thanks for your trust. It's been a great past 2 months. We've managed risk very, very well on the downside in September and bought right when we needed to. So we're doing better. Still have some catch up. And as you can see, small caps are finally breaking out, which is good. But this is really struggling with 47.15. It's going to probably need a scare before we get above that. Maybe I'm wrong. I mean, this could bust to 47, like 43-ish. It's another technical level. I don't think it's going to happen today, but very well could happen next week. So I am bullish, but I'm being realistic short term. Okay. So hope that helps. We'll keep you posted with the ending results and the write-up that you'll get in the email. Thanks, guys.